Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Aisha Faridi as well as Ajay Sharma. And for now, the market is off the highest point of the trading session. That's the only way to perhaps spot it, because the index is almost 200 points off that 22,600 mark that it had earlier seen. And the Bank Nifty too has seen a major cut. Mid-cap index and the broader markets are holding up. In fact, the strength in the broader markets is definitely something which is very commendable. The mid-cap index hit a record high level, and I think it's been almost a month's time that we had seen that level on the mid-cap index, as well as the small cap index continues to rally and hit fresh record highs. IT sector has been rallying, all thanks to the numbers coming out from Tata Mahindra, Zensar, Emphasis, etc., while banking names have slipped. In fact, for the banking names, what's intriguing is that there's no buying on dips. After that 11% cut on Kotak yesterday, it continues to be in the red today with a 2% cut. Bajaj Finance is the stock that I wanted to highlight, and not Finserv, because that stock is down almost 7-8%, and the IndusInd as well. It was a no fireworks kind of number. There wasn't anything big negative per se, but given the market mood, Ajay and Aisha, I think the street is just in a mood to perhaps kind of punish the numbers which are not very encouraging at the moment, and that's what we're seeing in the markets right now.
Absolutely, be it IndusInd, be it Bajaj Finance, which is now down 8% in the futures, ahead of Bajaj Finserv numbers, which are tomorrow. That stock is well ebbing off by a good 4% as we speak right now. LTTS cracking about 9.5%. Shriram Finance ahead of its numbers is down 4%. Though on the flip side, of course, Biocon has been a star performer today. It's a 6% notch up. Some of these defense allied themes, they continue to hold up, and today is no different for a Concor, which is up about 6.5% or so. Coromandel International looking very, very smart indeed, and TechM is the one which is sitting right on top amidst the list of winners from the word go today, almost an 8% notch up on that stock as we speak right now.
In fact, Aisha, the advance decline is still favoring the advances thanks to the broader markets. But if you look at only the Nifty Sensex, the Bank Nifty, you may not find very big movers. What is happening today is that some of the names which have not been doing very well, or in fact not participating at all, have come back in style. Look at IDFC Twins. They are doing very well in trade. Almost a big move coming in all Kirloskar Brothers stocks, Kirloskar Industries, Brothers, Pneumatic, Ferris, all of them rallying in unison. You're also looking at Ashok Leyland today rallying over 4% in trade, along with Havells 5% move. Up till now, it was just Blue Star and Voltas which are doing well in the consumer durable name. Now Havells is giving company. A whole host of consumer names, again sleeping for a very long time, have come back. Marico, Pidilite, to name a few of them. Amit Khurana is joining us now to talk more about markets and the way they are looking at the markets at Daulat Capital. Amit, afternoon. Thank you so much for your time. Remember last time when we were talking, you were slightly cautious on the market, and by mid of March, that caution actually played out. However, it was short-lived in the market rebound. What's your current prognosis of the way earnings seasons are panning out? Did you request your all the clients to buy that dip, or still they are on the sides?
Yeah, thanks, Ajay. I think, the correction did play out, which we were anticipating, but the depth of it and the breadth, I must say, did not come as much as one would have wished for, because that would have made the attraction, I know the valuation is more attractive, but this is classical markets which every dip gets bought into. Now, the earnings season has not really started on a strong note, I must say, because most of the numbers till now do not suggest a very strong either a performance for Q4, but even from the commentary perspective, when you look at, I would probably call it mixed. It's not negative, but it's not definitely something which can lead to an earnings uptick. Whether you look at IT services, whether you look at some of the financials which have reported, there are small tweaks that you're doing here and there, but nothing directionally which leads us to an upgrade of the view on the market per se. So in that environment, how do you navigate the next few months? Our take continues to be bottoms up, stock picking as a preferred mode, and look out for names either showing signs of turnaround or names which have visibility. Even though you may have to pay a little bit of a premium on the valuation side, but then the momentum continues to be supportive for those sectors or stocks, continue to back up those. And this is a very divergent market, which tends to give it much higher premium multiples for names which are performing, and tends to beat down sometimes unfavorably names which are not showing the desired numbers or the growth pattern. So largely, I think bottoms of market is what our take is for the first half of this financial year, and that we stick to that view as of now.
market. And talking about bottoms up, take a look at Exide and Amara. It's again seeing quite a bit of rise at this point of time. Exide, I think, is up a solid 5%, and bulk of that move has happened in the last few minutes itself. And let's pull up Amara Raja batteries too. That stock is in focus. So both of these counters actually doing quite well. Amit, wondering what's your view is on these battery companies, because they have seen a solid run in the last 1 month.
Well, yes, I think if you look at the slightly longer time frame, they have outperformed the pack, the sector, the market by a very, very wide margin. And I think a part of that was, of course, the tailwind trade that we got to see when the raw material cost normalized, and then of course you had the follow through demand playing out well, and now you have the new battery storage as one of the drivers of the valuation. So I think structurally these companies will benefit from these new businesses which are emerging. But I think the discounting of those as of now seems pretty well in the valuations. In fact, from the overall auto ancillary perspective, we believe the manufacturing, the other segment for OEMs is better placed versus the battery as of now.
Right. Amit, just wondering how to navigate within the IT pack right now. I mean, sure enough, the commentary from the big boys continues to be still elusive and, pretty unclear. But that's not quite the case with the Tech M, for instance. Yes, they're talking about FY27 projections without a clear roadmap. But would you say that, other than Tech M, this could perhaps prompt you to start nibbling into a completely unloved, under-owned sector right now?
Well, it's not unloved really, because the mid-caps have been performing reasonably well. And that's where our concern is, that the PEG multiples that you are paying for some of these franchises, some of these names are pretty rich. So our take has been that even if one has to play on IT, one plays on the large cap, and that again is very, very stock specific. So for example, HCL Technologies is one of the names that we've liked that has done reasonably well. Mid-cap concern still is that even for 8-10% or even low double-digit growth visibility, you are paying 30, 32 times, 35 times, which does not really seem to be very, very attractive to us. Now, let us not forget that the environment probably will worsen over the next couple of quarters. This is what the commentary seems to suggest. Now, how will these mid-cap companies navigate? One has to see. So our take on IT has been very specific on the stock side. In fact, rather than play the IT, we played more on the digital side of the themes, wherein some of the domestic digital themes have played out much better if one were to expand IT into a larger basket. But pure IT services, we are avoiding mid caps very clearly and preferring large caps on a stock specific basis.
Kunal and Nuresh are also joining us on the show. Kunal, some of the interesting counters which are very quiet for a long time have seemed to have woken up. For example, Havells and Ashok Leyland. Any of those charts you have on your radar?
Yeah, Havells is something which looks attractive. Ajay, and I think with Voltas breaking out of that 1000, then 1200 and 1300 triple resistances for itself, I think Havells has also managed to come out of a major phase of consolidation, zone of underperformance for itself. So I think that's something which looks attractive. Now I think trading closer to 1630, 1640 plus mark, I would probably believe that this momentum should carry on and continue. So what has happened is today, many of these stocks have opened with a gap up. Havells has created that gap up support, I think just around that 1500 odd mark, 1500, 1520 range. So I think that should now act as a very strong support for the stock. There are other names which have also made a very strong comeback. From the comeback theme as such, Sun TV is something which Biocon, Sun TV, these are the two names which I've been earlier bullish on. These stocks have been showing some excellent signs of recovery for themselves. So I would probably pick, from these two stocks as well, Sun TV as well as Biocon. Both of these stocks are looking fairly attractive. And I would believe that this could be a very strong indication of a momentum shifting towards many of these other underperforming names and not the traditional financials, banking, etc., which I believe could probably act as a drag for some more time.
Point taken. Just wanted to highlight the numbers coming in from Shriram Finance, and it's bang in line with expectation as far as the profitability is concerned at 1950 crores. The NII too has come in at 5,336 crore, a little better than what we were expecting at 5,106 crores. Even with respect to AUM, it's increased by 21% on a year-on-year basis. It stands at around 2,24,861 crore rupees. So broadly in line with expectation as of now. In terms of the other details, where I'm just looking at the grocery assets as well, that's also 6% kind of number that we have seen on a year-on-year move. and overall the numbers seem stable. We'll try and get more details, but the stock has been pretty much stable at that 2.5% cut mark. We are not seeing any big reaction either on the upside or downside for Shriram Finance at this point of time. But shifting focus to some of the other big movers right now, we of course have Concor, which is doing quite well. Hoodco is in focus, and then Dixon Tech has managed to gain 6% apart from Havells India as well. What's your take, Nuresh, on the likes of Dixon, Havells, Concor?
So Concur is something which I've been recommending for quite some time as the only one which has not yet caught up with the whole PSU basket. Finally, the stock has hit a new all-time high. And even if we look at it from the perspective of an all-time high, the previous high was around this 1030 mark, which was back in February of this year. So a fresh breakout here looks good for a target price of 1400 in the medium to long term. Have a positive bias here. Then looking into Havells, this is interesting because what we've seen over the last few months is one by one consumer appliances names have started breaking out. It started off with Voltas. We've seen some recovery in Crompton Consumer. And now Havells, which was the first one to break out, I've not seen a sharp momentum after that breakout above 1450. Consolidated between 1450 to 1580. Finally, today that has broken out. This opens up an upside towards the 1900 mark in the short to medium term.
Mid and small cap shake-off, which transpired in March, perhaps started with the overheated railway names, some of the defense names as well, where some of the weaker hands got shaken off. And now again, they've more than recovered all of their March losses. Wanted to understand whether you're constructive and continue to be so in the long haul as well on the railway and defense names.
Sorry, is that for me?
Yes, Amit, for you.
Yes, yeah, sure. So yeah, I think the story does not change in the longer term. Essentially, the market tends to sort of give too much of a premium multiples in the near term. That has its own sort of way to correct, either in terms of time corrections or in terms of price corrections. Ideally, a combination of both. I think the overall view, structurally speaking, continues to be extremely positive on domestic epic stories and the spenders, so to say, because the kind of support that we will be expecting, hopefully, when the new government takes office, whether it's a current ruling coalition which comes back or whosoever comes back eventually, but I think the momentum for some of these businesses remains very much in place. And remember, one very important part is that the balance sheets are much stronger than what was the case a few years back, and that I think is very, very supportive of the valuations continuing to be higher than what we would ideally want them to be.
Shriram Finance is recovering very smartly from day's lows because the provisioning number is not worsened. In fact, it's just flat. The 27% revenue growth without worsening of provisioning actually perhaps is something which the street is liking. From 2340, almost $100 recovery coming in, breaking into the green. We'll get a review also going on that name very shortly, which is now a Nifty participant, by the way. But Nuresh, look at the charts of AFL India. For the last 4 quarters, the stock has been punished because of weak earnings and almost halved from recent top. Today, it's come back. Is the move backed by volumes? And how does the chart setup look like?
So still would be a weak one, given that it's still a one-day price action. If you look at it over the last few months, it has made tops around the 1300 mark multiple times. On the bottom side, at least 1000 is the support which it has held down for the last 6 months. So for now, 1200 is the first resistance. Next is at 1300. The trend still remains weak. Would be too early to call a trend change out here.
Before we let you go, any fresh recommendations from the House of Daulat, or which are those high conviction buys that you are probably recommending and putting in the buy list?
Well, it will be up for review post the earnings season. We haven't changed that drastically. I don't see a very, very significant change. One sector which is up for debate at our end is chemicals, which has shown some evidence of pricing having bottomed out. And depending upon the volume visibility that we get to hear in the earnings commentary and the overall themes that work out at the global front, we'll probably take a review at that. So that could be one candidate for a potential upgrade from our side, but that's not the case as of now.
Okay, Amit, good to have you on the show. Thanks as always for taking the time out. Let me also welcome on board Amit Shah as well to talk about Aditya Shah, I beg your pardon, from Hercules Advisors to try and analyze Shriram Finance's numbers. Aditya, hi, great to have you on the show. Thanks for taking the time out. Just help us understand what your first take is on Shriram Finance, because prima facie what looks is that the provisioning has been stable for them.
Yeah, so I'm just looking at the numbers, but as of now, it looks to me that the numbers are really very stable. The provisioning number is also in line with what we were expecting. So overall, there's nothing to complain about. I'm just looking at the numbers. So give me a second. I will just look and get back to you.
Okay, point taken. So that's the view on Shriram Finance. At least as Ajay was pointing out, it seems like the provisioning hasn't worsened for them and the other internals have been maintained for now. But since we have you with us, Aditya, would you have a view on Bajaj Finance? And after that 7-8% drop in the share price, does it come into the value and the buy zone?
The Bajaj Finance's numbers were very, very stable. There's nothing to complain about. In fact, on the call, I just got a feeling that they have also put in the management transition plan into motion, where we will see successors to Rajiv Jain coming in. So that's the first point. The numbers, there was nothing to complain about. A little bit of slippages were there on the corporate side of it, but all of them were stable and nothing per se negative. From a valuation perspective, still it trades at about 5.5 times price to book, which is very near to the historical lows of Bajaj Finance. So I think if you are a long-term investor, you can start to nibble in. However, now the growth has slowed down for Bajaj Finance from that 40-50% that we used to see to about 25 to 30%. So we could see a valuation de-rating on the stock, and this 4.5 to 5 times price to book could be the new normal. So net, long-term investors can start to nibble in. But if you are an investor, you should be very, very careful on the stock.
Aditya, thanks very much for that take. Kunal, have a look at KFin Technologies. Again, I think in the next 10 days the results would be out. The previous quarter was a very good one for KFin. Ahead of the result, coming back to 700 levels, how does the chart look like?
Yeah, this is interesting. Ajay, I think the stock in last month, if I'm not wrong, formed a bearish engulfing. So I think it sold off from 700 levels to I think 550. That was the low the stock had made in the month of March. And this time around, the stock has managed to recover almost entirely from that 550 levels to now on the verge of breaking above that 700 mark yet again. So it's very rare to see a stock which has formed a bearish engulfing pattern, and then in the subsequent month, the stock immediately forms a bullish engulfing pattern. I think it's very rare to see such kind of chart patterns. But this indicates that now the dominant sentiment for the stock is on the upside. So what we could be looking out for is that 100-150 pointer range or the correction the stock had gone from 700 to 550. That correction could probably be now replicated on the upside in terms of the target potential. So which means we add back the 150 points towards the 700 mark, which is the breakout. And we could be looking at potentially the 850 levels for the stock in the near to medium term.
Okay, we'll slip into a very quick break. It's going to be a critical next half an hour for the markets because I think next week as well is a truncated one. But here's Health Minister Mansukh Mandviya reacting to the FSSAI probe into baby food products amid the Nestle row. In an exclusive chat with my colleague, the Union Minister says that they have taken cognizance and they've taken, or rather they have to take action in case of violation of rules.
देखो फसाई है ये फूड सेफ्टी स्टैंडर्ड तय करती है तो कोई स्टैंडर्ड का वायोलेशन करता है तो एक्शन होता है कोई स्टैंडर्ड को मेंटेन नहीं करता है उसके सामने उचित कार्यवाही भी की जाती है तो ऐसी कोई भी शिकायत जब हमें मिली है तब भी हम एक्शन करते हैं और नहीं मिली है तो भी हम रैंडम सैंपलिंग करते रहते हैं उसमें भी कोई मिलावट पाई जाती है कोई स्टैंडर्ड को मेंटेन नहीं करते ऐसा कोई फूड मिलता है जो उसमें लिखा है ऐसा नहीं है तो भी उसके सामने कार्यवाही होती है
Welcome back. Well, the market is still meandering just around the 22,450 mark, so not a whole lot of recovery from the lows of the trading session. But for what it is worth, it's IT which is holding one end of the market. Tech Mahindra is still up around 8%. And then you have some buzzers from the broader markets as well within the IT arena. Emphasis holding with a 3% gain. LTI Mindtree, which got badgered after the earnings, is recovering a bit today. We are seeing a gain of around 3.5% on some of those names. But what's the outlook for the entire IT sector? That's something we'll try and decode with D.D. Mishra. He's the VP analyst joining us from Gartner. Hi, Mr. Mishra. Good to be speaking with you. First up, just wanted to get a sense from you with respect to the earnings read-through and the commentary that we have heard from the managements of the Indian IT majors. It lacks the confidence that the recovery is around the corner. They're still non-committal about it. However, the forecasts coming in from Gartner have been improving consistently. Talk to us about the kind of outlook you are witnessing with respect to the client spends, discretionary spends, and the pace of the overall ordering.
Yeah, so thanks for having me here. And the way we look at it, there are two perspectives of it. One is the larger perspective where we see that how the next 4 to 5 years is going to change around IT. And that looks quite promising because what we see that 2025, 26 and 27 is going to be a double-digit growth. And there is no cause of concern as of now. If you look at the last year and this year, the IT spending has been under pressure. And there are various reasons for that. One is that the economic challenges which we see across the world. There are certain uncertainties which is prevailing because of the various conditions which is emerging across the globe and more from an economic uncertainty perspective. We are also seeing that there is a kind of change fatigue in the CIOs, and they are not ready to spend unless they are very sure that that particular spend is going to create value for money. So that is also preventing the CIOs in a short term in launching new project, new initiative until and unless they are very sure that they are going to get the return out of it. So there are various challenges actually we see at the moment. Currently, yes, that is impacting the IT sector results as well, quarterly results. But if you look at on a larger canvas, we see that, overall, the sector is going to grow. And there are reasons behind it, actually. Business and IT are closely integrated. And if you have to be in business, you have to actually evolve your IT. And that is a necessity. And you have to continue to spend on IT. You have to continue to evolve your IT. And and when there is a crisis, people look at the technology to navigate through those crises. Apart from that, you will see that there are a lot of tailwinds like generative AI. We see that is becoming a kind of buzzword across the industry. And most of the CIOs we talk to intend to actually use Gen AI in some form, which is going to create more opportunities. So 24, 25, we see that the AI-led kind of growth, which is going to come, and AI has to play a very critical role. In 2023, AI spending was around $3.5 billion. But we are expecting that this thing is going to grow in 2024-25 significantly. There are, other challenges which we see that, in terms when there is an uncertainty, CIOs are struggling. And in this situation, they take a lot of consulting support as well because they don't know what they don't know. And this is where they depend on the consulting services, which has been growing significantly. So we will see that there will be disruptions in the short term, but in the long term, the outlook is positive.
Taken, but just quickly to ask you about that AI opportunity, which Indian company do you think has made bigger strides into it? And with respect to the mid-cap IT as well, a lot of them are doing niche work. ER&D is doing quite well. There's, of course, the entire automotive-backed industry, which is doing quite well. Do you see these niche areas outperforming the rest of the consulting and the outsourcing business per se?
Yeah, so if you ask me that, about the Indian companies, so most Indian companies are, I would say, lagging behind in terms of the Gen AI. So initially they were, closely observing that kind of development is happening. Now they have got into the kind of POC stage. Some of their use cases are in the production stage as well. But I see that more global companies are actually, ahead of the game, and this is where the Indian companies needs to catch up in order to be more competitive in this particular space. But yes, it is kind of disruptive kind of thing which is happening at the moment, and I see that the niche companies will play a much bigger role over here, and there's a lot of opportunity for those who are coming up with the disruptive technologies and concepts in the near future.
Okay, Mr. Mishra, thanks so much for making time and speaking with us. In the meantime, there is big reaction on the stock prices of Motilal Oswal, which is just reporting its numbers, I believe. Shriram Finance has actually seen quite a big move at the moment now. The street is digesting those numbers. Maybe we can pull up the intraday charts because that will give you the better picture of what I'm talking about in terms of the stock moves. And then CSB Bank is taking a bit of a knock with respect to the earnings reaction coming in. So some of these names are reacting right now. So CSB Bank, Motilal Oswal, as well as so that stock has taken a knock. So Motilal Oswal has actually announced an approved bonus in the meantime in the ratio of 3:1. That's the reason that stock is spiking away in the trading session. And the other one that I pointed out was also Shriram Finance, which is seeing a bit of a recovery as we speak. But just shifting focus and talking about Apollo Hospitals as well, that stock is in focus because reports do suggest that perhaps there is that announcement going to happen for the minority stake sale in Apollo 24/7. Remember, this has been something which has been in the works for a long time. Ms. Reddy has been saying time and again that they're not in a hurry to divest. They're looking for right valuation. They're making sure that they get that. But our report suggests that the buyer is likely to invest 2,100 odd crores for a minority stake, and analysts say that if this valuation is true, it's a bit lower than their calculations, and this would mean trimming of the SOTP valuations by 4 to 5%. Let me throw it to Kunal and Naresh and get a sense with respect to the chart check going on that. Kunal, your word on the charts of Apollo Hospitals. Do you see any big trigger or anything to tell that the stock is in consolidation?
Yeah, I think it's just consolidating, Nisha, because the stock has literally not done anything. I think mid of February, for example, the stock was almost at 6,800 mark. In the March month, when the markets went to a corrective phase, the stock came back towards testing the 6,000 levels, and now it's back again to that 6,250 mark approximately. So today the stock made a high, for example, at just around that 6,400 levels, which means we are fluctuating into this 800-point band if you look at it on a more broader perspective. I would believe that till the time the stock is trading into this band, 6,000 on the downside approximately and 6,600 on the upside as a resistance, I think we could just about.
We seem to have snapped that line. Just going to get back to Kunal in just a second from now. Meantime, Vedanta is the other stock which has been holding out after its Q4 performance, which came in largely anticipated across segment, according to brokerages who did up their price targets as well after those numbers. That's the stock holding steady by about 4%. And Naresh, the entire metals pack, I mean, not just Vedanta, has been fairly buoyant. Almost on a daily basis, we've been chatting individual names as well. Where is it that you still find value and strength on the charts within the metal counters?
So in terms of metals, what we've seen is the aluminium side has done really well. And in the same case, if you look at it, steel is now finally coming towards a breakout. So we've seen SAIL breakout. Today we saw JSW Steel breakout, but has pulled back a bit. Jindal Steel has continued to do well. So steel could be interesting out here. So JSW Steel looks promising. And then on the aluminium side, Hindalco, which has finally broken out above into a cup and handle breakout above 620, 630 levels. So that remains a buy on dip. So Hindalco is one, second would be JSW Steel. And Vedanta at current levels has actually moved up from 280, 300 all the way to 400. So the risk reward is not great, but the trend is still positive. So it would still be a hold. But Hindalco on dips looks the most promising one to me.
Okay, I think the gains on Motilal Oswal is actually building up. So apart from that, board approval for bonus, of course, the earnings have been strong as well. And then, of course, the overall change in the leadership is also something which is actually working out. Naresh, your quick take on the charts of Motilal Oswal and then your closing trade ideas?
So Motilal has moved up from 1400 just in March all the way to 2600 now. So time to take some profits off. The results have come out. So out here, the price action is done. 2600, 2800 would be a good zone to actually book profits. So not very positive here at current levels. Time for a pause here. In terms of the stock idea, I would be looking out for is Engineers India. That has given a short-term breakout now. That could go towards 260 in the short term.
Okay, let's get in closing trades from Kunal as well. Kunal?
So there'll be a buy on City Union Bank. That's a chart which is now popping up in terms of a radar, in terms of a breakout. I understand that the bank Nifty is showing signs of weakness, but this could be an an offbeat name which could probably make a very strong comeback. So that's a stock which I'll look to trade, specifically about the breakout of 164.
Okay, on that note, we're going to take a very quick break. A sharp reaction on Motilal Oswal. Still about 85 points lower for the index. The breadth still well in favor of the advances. Back to closing trades right here on ET now. The broader market, of course, continues extremely lively. Coromandel is now holding up almost 8% in trade. GMR Infra is seeing a dash of about 6.5% as we speak right now. That stock too sitting at the high point of the day. There's Dixon as well, higher by about 6.25%. And we've been marking what's been happening with Concor, the likes of Sun TV. You've got a decent move coming in. On the likes of Hoodco as well, which is currently at the peak of, or rather a life high as we speak right now. And Sun TV as well going extremely strong. That stock is now sitting at 669 levels as we speak in trade. But let me welcome on board Devin Choksi as well and find out what he's making of the market right now. Devin, hi, afternoon. Just wanted to understand how you've digested all the numbers and the news flow so far. Good numbers from Axis, and then that, RBI ban coming in from Kotak, and of course, Bajaj Finance as well. That's been quite the howler.
Yeah, good afternoon. Well, so to me, I think the numbers of Bajaj Finance in particular, I think have remained once again very reassuring as far as I think the growth aspect is concerned. The company on a larger base of 3.3 lakh crore AUM is continuing to grow the engine at around 28 to 30% rate of growth. So which is definitely, I think, good. The current management guidance probably, I think, is suggesting that there will be slightly muted growth in the current year, but still on a larger balance sheet. I think that should not affect much as far as the company is concerned. So to me, I think this company remains, I think, a very strong proposition. Largely also because of the fact that the housing finance business per se, which is part of subsidiary of Bajaj Finance, is not something which is adequately valued by the market, which I believe, I think, would probably get valued once this company is becoming a separate company, getting separate listing as well. So in such situation, I think one would see a relatively better amount of growth, I call it trigger as well. Overall, I think the interest rate scenario in the country is suggesting that I think it has already picked out. So to a greater extent, I think with the fall in the interest rates, eventually somewhere June onwards, I think when the RBI policy comes out, we believe that I think that will be signaling relatively better signal for most of the finance companies, including Bajaj Finance, even for that matter, the Axis, CSA among others. So to a greater extent, I think the opportunity would be best when one is getting an opportunity to buy the stock when the market is giving one during this sell-off.
That's the view coming in on Bajaj Finance. But in the meantime, take a look at Five-Star Business. That one is perking up quite well. Nuvama Wealth Management is the other one which is doing quite well. And Shriram Finance, as we talked about, the numbers were just out, no disappointment there. But from this pedigree of the likes of Five-Star, Poonawalla FinCorp, other microfinanciers, etc., what's your reading, Devin, of the visibility of growth and risk-reward right now?
So yes, I think there is a slight amount of valuation which is not giving me the comfort in some cases, and that's where probably I think you can well argue that the element of risk is slightly higher at this point of time in some of the names which you have mentioned. However, I feel that I think the current market is giving an opportunity during the corrections. And these corrections, they do come on a stock specific basis. These corrections don't come on a overall market basis. So suppose if today, if the Kotak Bank is down, or for that matter, Bajaj Finance is down, I guess I think that becomes a buy opportunity for investors to buy into the portfolio, largely because I think when the next trigger comes in, the recovery would be equally sharp of 20-25%. And that is where contra buy has to take place. That's the beauty of it, that this market is giving some of the good quality fundamental stocks at a lower price because of some negative news flows. But that is the time when I think we as an investor, one gets the opportunity to buy into the portfolio.
Okay, some very bullish commentary coming in the housing finance segment from the House of Motilal Oswal. Of course, there has been that management rejig along anticipated lines. Naveen Agarwal is now going to become the MD. There's a bonus share issue in the ratio of 3:1. But the fact that they're talking about the sales force being doubled in FY24 to reach 925 relationship managers, they aim to double again in FY25, just shows the kind of conviction that they have in the growth of the business. They're also talking about new leadership being pretty geared for doubling the disbursements in FY25. Specifically, Deven, just wanted to talk about Realty as the entire gamut along with ancillaries, and that talks about, or rather includes financiers as well. Where is it that you think that there's still money to be made in an already discovered pocket?
Yes, I think it convinces us that housing finance as a space remains absolutely very steady space as far as I think the investors' money portfolio is concerned, largely because of the fact that it is this area which is growing at the rate of 20% plus kind of a growth. And the higher amount of conviction out here is also because of the fact that as the size of the economy grows, as the size of, I think, the savings and investment component within that economy grows because of the 1/3 of amount, which is basically out of saving and investment. And out of that 1/3 amount, about 60% remains within housing and the gold. I believe that the housing per se is basically going to grow at the steady rate of growth of around 20% plus on a year-over-year basis for at least next 3 to 5 years as we see it. Given that kind of position, and given the position that the demand scenario remains definitely strong for the real estate and housing in particular, I believe that I think housing finance company as a proxy to real estate company for investment will be a safer bet. The downside risk is protected to a greater extent, and upside would be available because of the higher growth that they are talking about. And if the interest rate scenario, I think, starts showing down, that is coming down, which is expected in this calendar year, I believe that I think overall benefit will come into the books for most of the financing companies, including housing finance.
Point taken. Just wanted to highlight that the Nifty has actually dipped below the mark of 22,400. From there, there's been a smidge of a recovery. So we're back at 400. Clearly, the bulls are fighting for that crucial level of 22,400. But it's a broader market strength, which is really commendable. Let's pull up the mid cap and small cap and see whether there has been any sell-off there. Not really. We're still holding on to those record high levels, both on the Nifty as well as the mid cap as well as the small cap index. So small cap has petered a bit. In terms of the stock specific action, just wanted to highlight a couple of these QSR names before I toss it to Ansh. Westlife Development, that stock has soared suddenly 8%, and Mrs. Bector's has been having a great day. It's been up around 7% as well. Naresh, what's your sense on a couple of these QSR companies, Mrs. Bector's as well as Westlife?
So it was Mrs. Bector's which gave a breakout yesterday. The chart still looks interesting. And the overall trend has been good for the stock for the last almost 1.5 years. And it's gone through a consolidation for 6 months also. So this breakout could again take it back to 1300, 1350. Westlife has seen a quick move right now, just in a few minutes. So the stock has broken out above the 850 mark, which was the resistance for the last 3-4 months. This could slowly and steadily go back to 1,000 odd levels, but would be a buy on dips, not at current levels.
In on some of these ancillaries from the entire QSR space, but on to Ansh now. Ansh, tell us which are the big price volume buzzers that you're spotting?
Yes, so Hoodco will be the first stock in focus as the stock has actually given a breakout from its reverse head and shoulder chart pattern, registering its biggest single weekly gain in 12 weeks. Also, the volume is over 10 times its average volume of last 10 sessions, indicating good participation in today's breakout from this reverse head and shoulder pattern. Apart from this, Havels will also be in focus as the stock has actually given a breakout from its cup and handle chart pattern, touching record high level with volume of over 3 times its average volume of last 10 sessions. Lastly, Coromandel International will be in focus as the stock has actually given a breakout from broadening a wedge chart pattern which is on the downside. In addition to that, the stock has also surpassed above its 100 DMA with volume of over 3 times its average trading volume of last 20 sessions. So keep an eye on the stocks.
Ansh, very interesting bunch of stocks you've highlighted for us. Appreciate you joining us. But in the meantime, just going back to seeing what's happening in the markets, because a lot of numbers are expected today. Maruti was expected to come within the market hours itself. We haven't heard anything yet. In fact, let me take it across to Shrishti to get the expectations going. Shrishti, what are we expecting from Maruti this time around? Because the stock is a bit skittish ahead of its earnings.
So this time we are expecting a good set from Maruti Suzuki because look at the run up in the volumes and the jump in the volumes, because on a quarter-on-quarter basis, the overall volumes have seen a jump of almost 17%, while on a YOY basis, the volumes have inched up close to 13.5%. And also, if you look at the mix of their UVs in the overall portfolio, that is now zoomed to close to 37% in Q4 of FY24 versus just 26% in Q4 of FY23. So all in all, great set of numbers expected from Maruti Suzuki, and hence we are seeing this stock is also seeing no stopping. But when it comes to the overall numbers, on the revenue figure, we are expecting 38,860 crores. That will be a jump of 17% on a quarter-on-quarter basis. If we talk about EBITDA, close to 5,000 crores is what we are expecting. And also on the margin front, we are expecting an improvement on the back of the better pricing as well as benefits from the operating leverage. 13% is what we are expecting the EBITDA margin, and that's versus 12% that the company clocked in Q3 of FY24. And lastly, on the profit figure, our expectation is of 3,046 crores, though that will be a flat growth on a sequential basis. But nevertheless, the key to watch will be the margins of the company, where this time around 13% is our expectation. But apart from the company's earnings and all of these numbers, we will be watching out for company's commentary on the entry-level segment. How are they seeing the sales of the hybrids, and what are the future plans? If there are any more further and interesting details about their upcoming EV launch, we will be tracking all of those details. So all in all, good set expected from Maruti Suzuki, and 13% of margin is the key to track.
Okay, a lot of flux within the entire auto pack, and Maruti surely, especially the commentary, is going to be something key to look out for. In the meantime, let's just take stock of what else has been happening. In fact, Maruti actually has cooled off quite a fair bit from that 14,000 peak that it hit. From there, that's been almost a 1,300 point decline that you've seen on the stock already. Kunal, let's just get a chart check in on Maruti.
Well, I would still believe that maybe this could be a zone where the stock is seeing a bit of profit booking. What has actually happened is autos at large. So when you look at the Hero MotoCorp, you look at Maruti, M&M, Tata Motors, these stocks which have been erstwhile very strong performers for 2023 and then beyond. I think these stocks have gone through a patch of consolidation / correction. So I would probably believe that Maruti could also get into a slight phase of a correction, but I would probably term that as more of profit booking. Very strong supports for the stock at 12,000, 12,500 zone. So in case if it dips down, say another 200 to 50 odd points, it could actually be a very good territory or a zone to buy or go for a contrabuy on Maruti. So near-term wise, would not have too much of expectations on the auto names, but in case if these stocks drift by another 3%, 5%, then I think that could be a very good contrabuying opportunity.
Okay, let's get some BTST trades as well. Then going on that note, Naresh, what's on your list?
So first is the Barn Engineers India, which has given a short-term breakout, stop loss at 232, target price of 250. Second is the Barn Godrej Properties, which after this big breakout of 2,500, 2,550, did a retest and is now reversing back, expecting this to continue towards 2,700, stop loss at 2,600.
Kunal, what's on your BTST list?
So I'll go with the Barn IDFC First Bank. After quite some time, the stock making a very strong comeback, closing in around that 84-85 mark, which suggests a buy with a target of 92. Stop loss could be trailed higher to 82. And Sun TV is the stock which looks extremely charged up. A classic price volume breakout for the stock. Targets of 710, stop loss at 633.
Okay, so those are the BTSC trades coming in right now. But Deveen, what's the view on what's happening with respect to this entire consumer durable pack? You talked about real estate, but the stocks like Havells, Dixon, they're all doing quite well. And recently, of course, we got the news that Reliance might be looking at getting into the consumer durable space as well with the announcement of their Visor brand through which they'll come out with ACs, coolers, etc. Do you think that could be the next disruption from the house of Ambani's?
Yes, indeed. I think there are two things maybe in this entire space as we closely look at. One is the manufacturing abilities, which I think likes of Havells have significantly developed, apart from I think the conventional players like Yoda, Star, Voltas, etc. On the other side, I think the model which has emerged stronger for the global, the foreign brands, is the model which is outsourcing model, contract manufacturing model, wherein the Dixon number kind of companies have actually, I think, been significantly operating out there. The most important component in this entire game plan is your last mile with the customer, where I think there are two elements they come in front. One is your distribution, and second is the finance. Now, in case of, I think, the finance, the likes of Bajaj Finance and all have actually cornered significant amount of market, and now the Geo Finance could possibly be a strong contender to that particular area, wherein EMI-based funding will probably be offered either on the omni-channel platform, that is your online, or through your the digital stores which are on the ground. But more importantly, once you have your own customized brand, wherein I think you outsource it from the manufacturer on the contract manufacturing basis, I think the margins would be phenomenally high. And that's where I think the Reliance kind of company will probably pitch in, Reliance retail kind of company will pitch in and fit in significantly. So that could offer some amount of disruption as well to the existing players. We believe that there could be an opportunity, of course, I think, to the newcomers like Reliance Retail along with the GeoFin, which is there in the system. However, in the current situation, if you look at the individual stocks, most of these stocks are factoring the good results, which is expected in this quarter, April to June quarter of the new financial year. I believe that I think it is being factored into in the price already. So to a greater extent, I think it is already a stretch price as far as we are concerned on the valuation.
Yeah, and if that was not it, you can now blink it a symphony cooler, right?
That's quite interesting. In 10 minutes, you're feeling very hot. Okay, let me just
blink it a cooler. But yeah, the heat also has really come to that.
And the numbers were like within 1 hour, they sold out 13, 14 coolers. That tells you that there's clearly that heat wave and demand
in 10
is there.
minutes.
Oh, 10
that
minutes.
was Albinder Dhinsa's tweet this morning, that in 10 minutes they have already delivered 13 of these. But yeah. There's also Kirloskar Pneumatic, which reported its Q4 numbers, and Sharad is here to break down the numbers for us. Sharad?
Well, yes, strong numbers coming in from Kirloskar Pneumatic on a year-on-year basis. There has been a good jump in the revenue, jumping almost 36%, while PAT also jumped almost 86%. Now, margins expanded due to the favorable revenue mix, and also the overall numbers were improved on a back of strong execution coming in the CNG package orders. Apart from this, management has stated that the centrifugal compressor launch is expected to pick up in FY25, and importantly, they have given guidance also, especially for FY26. They're expecting a 2,000 crore revenue target, while the medium term it's expected there would be a 20% growth in top line. Their margins expected to reach between 18 to 20%, and strong order inquiries have been coming. The analysts have stated that the company is a key beneficiary of the massive ordering in the CGD, which is the Central Gas Distribution Network layout, where it enjoys a 50% plus market share. Also, post today's rally, the current market price is more than what the analyst targets have been there. And the analyst target for Antique is at 1,073 rupees per share, while for Ambit it's 1,039 rupees.
Okay, so that's about Kirloskar Pneumatic. That stock clearly firing away in the trading session. But what else is happening right now? You have Woodco with a gain of 13%. New India Assurance has actually inched higher. NLC India has been doing quite quite well. On the losing side, Spark is the other one which has consistently been in lower circuits, and TRIL or Transformers and Rectifiers too has reversed its course from those upper circuit levels. It's been locked in lower circuit for the last few days. Ajanta Pharma is in focus on account of the flash at the bottom of the screen. The company might consider a buyback come May 2nd, so that stock is seeing a bit of spike. But the biggest democracy across the world is actually going through the second phase of the Lok Sabha election polling. Let's take it across to my colleague Sumit to get an understanding as to what exactly is on the line in this phase and how's been the voter turnout so far. Sumit, take it away.
The crucial second phase of voting in India currently. The voting is happening all across the country from Jammu and Kashmir to Karnataka, and we are currently in an important constituency called Gautam Budh Nagar, popularly known as the Noida city. Well, it's adjacent to the capital New Delhi. Issues here are quite different. Issue is of development, the crime, infrastructure development and other sorts of developments and modernization. People here are quite educated. It is not a rural belt, so that is why the issues here are quite different. If we talk about the other parts of the country, well, the contest is between important candidates, including Congress, Rahul Gandhi, Shashi Tharoor, and important BJP leaders. Hema Malini is fighting very near from here as well. Arun Govil from Meerut, this is Western UP part. It's considered as a very important part for voting as well. So the second phase of voting is happening. It's crucial to see what kind of voting takes place, because in the first phase, the attendance was not as high as expected. Since morning here, people were coming out in good numbers, but as the temperatures are rising, the attendance is also thinning out. In the evening, it's expected people will come out and vote in large numbers.
Okay, important day as the second phase of polling actually kickstarts. Deven, you think from now up until June, when the results do get announced, do you think the market will sort of shake off a little bit and we will see the lightening of positions in the run-up to the big event?
Yeah, the same and except I think the monthly expiry days like it is today. Rest of the days, I think the market should reasonably remain, I think, firm from the perspective of, I think, going up to the election. My take is that I think more or less the individual investors have understood the outcome of the election results. And that's where probably I think they are not going to see, I think, too much of runaway rally kind of a thing into the market. But any correction in the market like what we are seeing currently today, this will be easily get bought into, and that is where probably you are going to see the next round of rally resulting to the mark-to-market profits for some traders as well. Overall, the momentum remains strong. Fundamentals are absolutely in place, and I think that the result season also is quite convincing from the point of view of, I think, the numbers which have been announced so far. So overall, the strength on the market suggests that I think it will remain steady firm.
It's overall been a steady week actually. Nifty managed to inch higher by 1%. Small cap has done quite well with a gain of 4%, and the mid cap index higher by 4.3%. Clearly the star of the week gone by has been the PSU banking index with a gain of around 7%, and SBI too has managed to inch up by 7%, apart from Axis Bank, which is up 10% for the week gone by. Kunal, your view within the entire banking space, and let's put the PSUs and private banks together, large caps and small caps together. Which name is the top one or two names that come to mind as far as the banking sector goes?
See, of course, the PSU banks have definitely outperformed, and SBI has been one of the literally torchbearers, for the entire PSU banking sector. That's done exceptionally well. What we've also seen so far, when I look at the PSU basket first, is that the mid cap and the PSU baskets, which are a bit more quiet, silent over the last couple of months, those stocks have made a very strong comeback for themselves, and now they are inching back towards their January, February highs for themselves. So I think many of them are just closer to those kind of breakout levels. That's a very interesting kind of a prospect, because this gets back to the point that the markets are into a momentum zone, into a risk-on phase, and the PSU sector, specifically the PSBs, they could stand to gain much more stronger degree of momentum, both the large caps and the mid caps over there. The concern for the markets and the reason why the Bank Nifty every now and then tends to underperform is the private sector banking name, because look at the last 2 days of price action. HDFC Bank has been absolutely sideways at the 1500-1520 range, just stuck into a 1% kind of a band at a point when the indices were showing some signs of momentum. Kotak Bank has been at the receiving end, especially on the back of the news flow for the stock. I think that's adding to the concern for the markets as such. So I would believe that till the time these news flows continue to be negative or a bit more pessimistic for these few odd stocks, the markets could remain more towards the performing names. So I think in that aspect, it makes a lot of sense to go with the performing stocks, PSU banking names, SBI, etc. And if you're looking at the private sector banking names, I think Axis Bank, ICICI Bank, and maybe City Union Bank could be few of the new names which I could be looking out for.
Tomorrow, of course, is going to be the other one. You've got big boy ICICI Bank also delivering its numbers, which of course the market is only going to react to on Monday. If we can just quickly flash what the expectation from ICICI Bank is. In fact, while of course this week the star performer has been Axis Bank after its numbers, up until this year, ICICI Bank has been quite the steady ship. 1110 is where the stock is. Just very quickly, what we're anticipating from ICICI Bank's performance, we're expecting the NII uptick of about 7% odd. We are expecting fee income, which is unlikely to pick up, leading to the PPOP growth of around 7% odd on year-on-year basis. Provisioning, we're anticipating it to be on the lower end. And yes, a PAT uptick of nearly about 13% is what the ET Now poll is penciling in. Asset quality, that is of course, key on everyone's radar. We are expecting slippages to actually moderate on a sequential basis. So that's the expectation coming in from ICICI Bank. In the meantime, let's begin winding up for the day and the week as well. Devin, we'll let you go on that note. Kunal, Naresh, we'll see you again with all the market action on Monday morning. But we've stabilized somewhat. Yes, it started off to be a very quiet day. We have drifted lower from there. And we're closing in at that 22,550 print for the Nifty futures for 40. So well defending that 22,400 mark, which also we breached intraday today. So recovered from there. The strength, of course, was all within the broader end of the market. That's where all the lively action was. So be it a Coromandel, which closed in with almost an 8% gain, GMR Infra with a 7% move, Concor with a 6.5% move, or Dixon for that matter with a 6% move. Amongst the large caps, the day belonged to TechM all the way. Perhaps the only IT name so far which has got such a massive move after its earnings, and a thumbs up at that. So almost an 8% move coming in there. Divi's, LTIM, Bajaj Auto, DRL were some of the other performers. Not quite the case with Bajaj Finance though. That really, cracked hard on opening and drifted only lower from there. So almost an 8% gash is what you're seeing on Bajaj Finance on closing on the futures. Bajaj Finserv, wherein the numbers are awaited, a 4% move. Downtick coming in there as well. IndusInd Bank, M&M, Nestle, HCL Technologies, Kotak have all been the underperformers. But that's it from Anisha and me for the week. We'll see you again Monday morning.